Bitcoin is giving us a few local high signals at the moment. So let's jump into the charts and check that out. We're also going to take a look at where we are currently in this cycle and why I think we could be about to see a further prolonged range up around the previous all-time highs, and why most likely I can see us breaking out to new all-time highs and beginning the real bullish stage of the bull run once we get further towards the end of the year around either October or November. So let's jump in and have a look at the charts, guys. So first of all, the thing that is most obvious right now is we made our all-time high, the new all-time high, tagging 73 or almost 74K, pretty much around 14th of March. Okay, so that put in a really nice order block. And it was after that nice three push drive that we see often in Bitcoin before we get to longer consolidations after quite a nice rally. So this was a pretty decent push. We had the first initial sell-off after the ETFs, and then we had a 91% rally. And this rally here was kind of out of sync where we would sort of see a big push like that within the market cycle. And that's why I believe that we're sort of pushed a little bit earlier in the cycle to all-time highs, and that's why we made the new all-time high, but we can't really get that momentum build up enough to break out and start to pump to new all-time highs and go into price discovery just yet, and why the market probably needs to catch up to where it should be and sort of find its way to be back in balance, because we sort of overshot because of the extra demand that came in from the ETFs, and now the market is going sideways to sort of find its find its place in the market cycle and get back to being on track. But we'll take a look at that in a minute. But first off, the major things I'm seeing at the moment is that we're constantly getting rejected from this order block that was put in at the high here, right? So we've had 1, 2, 3, now 4 clear rejections from this order block. So this is realistically, it's the high, but this is the key level to see. If we can get a close above these levels, that's going to be a really interesting sight to see if we can get a final breakout and continuation to the upside. And then if you remember our macro fib targets, the next target up here is about 83K that we'd be looking for in a breakout from here. But the thing that I'm mainly watching at the moment and very, very likely considering is a rollover and breakdown back to retest the range lows around 61 down to 60K, or even coming all the way back to the developing yearly VWAP, which is at about 58.5 right now. So the reason why I'm just getting a little bit more bearish at the moment has a lot to do with seasonality. We usually don't see big breakouts in the middle of the month of June and runs into price discovery and stuff like that. That's usually the real period for the market to go nuts is in the summertime in Australia or the wintertime in the US. During the summertime in the US, we usually have long periods of consolidation, and so that's why I'm kind of seeing this more likely to break down and just chop sideways potentially until September. Maybe we get a breakout a little bit earlier because the ETF demand, or even October is generally the month that the market likes to break out of its consolidations into into the new bull market. If we go back and have a look at the previous bull market periods, if we just jump across, we can see that. And so this is my halving chart. We can see that the vertical line through here is the halving, and we can see that the time period where we broke out from key level of resistance. So the key level of resistance that we were kind of in the previous bull market cycle. So let's just say the 2020 halving was this level through here, which was pretty much 12K, right? And this was very clean weekly, and also that was the monthly all-time high level as well from the previous cycle. And we just couldn't break out of this level. We had a little bit of a push in August, and then rolled back over. But pretty much through the middle of the year, we had one nice rally up to that level. But apart from that, and yes, we did have a strong pullback and correction because of COVID, but we did have that sideways action where the market pretty much hardly moved for almost 160 days, right? You could push that up to 170, only really moved up what was that, maybe 20% or something like that, 25% move in 170 days. So pretty interesting to see that we're kind of in a similar consolidation at a really key level, right? Which is at weekly previous all-time highs, obviously. But if we go and have a quick look at the monthly and we compare, so we're getting caught up pretty much right just above the previous monthly all-time highs. And similar sort of position last time that we couldn't get out of. We were getting rejected for the monthly all-time highs. So just something to take note of then. But I think more importantly, the point I'm trying to get across here, guys, is the point of the seasonality. Okay. So when did we break out and really begin the rally into new highs? So this was really the beginning of this run, the real strong bull market run where we had a 400% move in Bitcoin into price discovery. And that realistically started on the 19th of October, right? Now, if we go back and look at the previous cycle, we had a halving, then a decent pullback. And, to get back above, that was about 180 days. And the halving was kind of a little bit more in the middle of the year, but we did come into this range in the middle of June. So we're sort of at this period right now, middle of June. And you can see that it was a very long consolidation period of about 180 days. So, we're in this consolidation period for about 180 days as well. Maybe we need to be in a consolidation period here for 180 days before we break out, which is going to take us to about early September, right? Now, things always change. You can't just go back and look at previous market cycles, but seasonality is a very important thing to take note of. And I just don't see us just randomly getting a breakout and just, drifting up to, 100K or something like that in the middle of the US summertime. I think it's very unrealistic to expect something like that. And so I'm just expecting that most likely the market's going to go sideways until we hit that seasonality period where, probably stock market's going to be breaking out and, there's going to be extra liquidity being added into the markets and things like that. And, we're going to be coming into election season as well. And, especially if Donald Trump is leading in the polls and he's pushing a very positive crypto message leading into the election, that could also spur into excitement. So realistically, I think that, the time period for us to break out to new all-time highs and begin this rally is most likely going to be sometime in October, right? Now, we can see here that our rally that sort of, begun the breakout of the 0.618 and sort of took us to new all-time highs into the beginning of, this very strong bull market rally that we had in 2017. It was 2,300% move, probably one of the greatest bull runs of all time. But yeah, that also started in Q4 as well. So, that breakout of, the previous highs and key levels through there was also in December. So it's more of a favoring towards Q4 when Bitcoin likes to break its key levels and starts to move, right? So obviously back here, we did have a break of our 0.618 quite early in this cycle. And that's why we're sort of detached away from my line. And I was sort of saying that we've kind of moved we've sort of mismatched, the sort of the map this cycle. We've sort of broken it out of a little bit of a mismatch of, the price and the time. So, that we should, in my opinion, I don't think we should have realistically been at all-time highs at this point in the cycle, before the halving. And like if we go back and look at the previous cycle, I believe also back here, we probably should have stayed in accumulation phase maybe for a little bit longer, or, only had to move up to, 6K or potentially even one of these lower levels here, about 8K. We had that extra push and extra rally very early in the cycle, all the way up to the 618 because of what was going on with the Plus token scam and all that sort of stuff that was going on in China. And they were just buying ridiculous amounts of BTC. And obviously that came to a halt. And what happened is we had a massive reaccumulation range that ended up, taking 500 days because we got too far ahead of ourselves here. So then we had to sort of consolidate that, get back on track to where we should have been, and then broken out at the perfect timing in Q4 of the year post halving, right? So that seems to be the cycle that we get given, is that post halving, we have the big breakout sometime in Q4, and then the market begins to take off, right? I mean, it's always hard to go back to 2012, but, sort of the same thing kind of happened here. We did have the halving was in Q4 here as well, but we sort of had that Q4, even, breaking to new all-time highs was a little bit later in that season as well. But, we had the halving, and then, a few months later, we end up having a breakout in Q1 to new all-time highs. But, the push again, once again here, obviously post-halving push started in Q4 of that year. So it just always seems to be that the big move that everybody's waiting for at the moment to happen seems to always come in Q4. And that's because that's just part of the seasonality of all markets. And, if we're going to dig down into, the technicals of it, in my opinion, it happens because all the big hedge funds all around the world, they want to go away and enjoy their boats in Mykonos and, their holiday houses in the Hamptons and stuff like that. They don't want to be having to sit at their desks and trading everything like that because the market's going nuts. So, they put the calipers on the market and they cause it to go in a sideways range with, specific algorithms that, keep us a little bit slower moving sideways. And you also need the eyes and ears and mouths talking about what's happening on the charts. And that just simply isn't happening while everybody's on holidays. So it just, makes it a lot harder for any asset to generate that momentum in the middle of the summertime. Whereas, when everybody's in the middle of their work year and we're coming into Q4, we've got the Santa Claus rally happening, and then we move into January, the period for the big breakout and run is typically sometime between October all the way until April. And I wouldn't be surprised if that ended up happening. So we sort of moved ahead of where we were supposed to be in our market map in terms of price. And now we're going to probably have to just consolidate a little while until we get sometime towards October. And, then if things are looking good for crypto in terms of what's going to be happening in the election and, the crypto positive party, which is looking like the Republicans at the moment, and Donald Trump, if they look like they're going to win, we might start breaking out a little bit earlier. And also, it depends a lot on what happens with liquidity as well. I think this is one thing that a lot of people are overlooking massively at the moment. We did have this really strong run, and liquidity has pretty much gone sideways. If not, it's made a really big lower high here. And even since the middle of April, they've basically drained a lot of liquidity out of the market. So this is definitely one chart that we want to keep our eyes on, that's for sure. And we'll have to wait and see how this ends up playing out. But pretty important is what we're seeing overnight in terms of monetary policy over the last couple of days. I should say last week in the ECB, they've actually decided to start to lower interest rates. Now we have FOMC tomorrow night in the US, or in Australia, it's tomorrow night, but on Wednesday in the US, we have FOMC. Look, all the markets are saying that it's 99 probability. If you go on CME predictions for, rate rises or drops, it's 99% probability. So they pretty much never surprise the market, guys, right? So I would be very surprised if they did shock the market and dropped interest rates, especially because there's another FOMC at the end of July. And then that would also take us to a full year of being in a pause at this level of rates above 5%. So then, they can have it for a full year up at 5.25, and then they can drop us down to 5, and then, drop us down again in the meeting after that, and get a couple of drops in before the end of the year is out in the subsequent meeting. So I could definitely see something like that happening. And, those interest rate drops, which sort of takes a little bit of pressure off the economy as well, leading to the election, could also help to improve sentiment in general and, cause some bullishness and breakout in the market. So a lot of things are definitely lining up for, a late Q3, sometime Q4, early Q4, breakout into the real bull market of this cycle. So, and then, obviously a lot of it is going to end up coming down to what happens with the US dollar liquidity as well. And typically when you get a new party come into power, which is what we saw at the last cycle when, Joe Biden and the Democrats took over, even though there'd just been a ridiculous amount of spending being done, for all through the pandemic and everything like that by the Republicans. They came in and just, because they wanted to, let's be honest, do their own money laundering through their own little BS programs and stuff like that. So they dumped a whole heap of ridiculous amount of money into the marketplace, again, funding and stimulus packages for every single thing, that they could possibly imagine. and even the most ridiculous things like studying fish in Mexico and stuff like that, or women's studies in Pakistan, things like that. It had nothing to do with bringing the US economy back on track, which was what those packages were for. So, you know, you have all those little things start to happen. And that happened because the new party got in. So the new party gets in, they want to print money and do stimulus packages to basically look after all the people that gave them money and make sure those businesses and people who donated the money sort of get paid back type thing for supporting them in the election run. So, you know, it's the I scratch your back, you scratch my back thing, and you get that rotation of the parties come in. So you get a whole heap of new stimulus as soon as that happens. So we'll have to wait and see if that does happen. But it's definitely, you know, it's not assured, but it's definitely something for us to keep our eyes on. If the Republicans do get back into power, you know, do we start to see this US liquidity line start to push up? Because that will be a really good signal to see if, you know, we can finally break above this 72, 73K highs and get a breakout here. So I should say, though, the caveat for us not to have a rollover here and finally break out of this order block that's been holding price down would be if this incline through here can actually hold, right? And we get some sort of rally up here, and then we get one more pullback, and then that just forms a really super obvious ascending triangle, you know, and maybe something really positive happens post FOMC. Maybe we get some really strong guidance that looks like, you know, inflation has come back down, because we do have CPI tomorrow as well. You know, maybe we get some sort of guidance that inflation has come back down, and you know they're getting ready to cut rates the next meeting. So there could be some strong hints from Jerome Powell during FOMC that they're getting ready to drop rates, and so that I think would be really bullish for the markets as well, and that could spur some sort of an early rally and breakout. So one of the things I am a little bit concerned about is we've had this really strong run of the ETFs have just been buying billions and billions of dollars of Bitcoin, and we haven't broken out of the highs just yet. And then we all had our first red day yesterday, and we've broken the streak. I can't remember how many days it was, but it was over 20 days, 25 days or something like that in a row. And, you know, the ETFs are actually buying a fair few Bitcoin. Just the other day on the 4th of June, we had $886 million bought, and then the following day was 488, and that sort of has put in the local high here at the moment. That was through this move here, and then we had the throwback and rollover to sort of wash out those weak hands that might be panic selling here at the moment, which we're seeing come through in that red day. But I think the most important level here at the moment on the daily time frame, you know, obviously apart from this high here, which sort of correlates with this high here and cuts through the order block. But yeah, this order block here from these two candles, I think is going to be really important to see if we can come back into that and hold. I wouldn't mind seeing maybe, you know, this is a strong down candle today, another deep down candle over the next couple of days. And then, you know, we get a reversal after sweeping these lows through here, right? So we sweep those lows there, and then, you know, we have a really positive FOMC, because basically Jerome Powell gives massive hints that they're going to drop rates next meeting, which is only in about 6 weeks. And then we reclaim that order block, and then that sort of gives us permission to start the pump to 83K. So that's how I see the path happening to 83K. Apart from that, I just really don't see a path to 83K or 100K until we sort of consolidate through this summertime period. And then we get, you know, the late Q3, Q4 rally starts to take off. In election years as well, Q3 tends to underperform, especially because, you know, everybody gets uncertainty into, you know, a massive uncertainty into the election, because you don't know who's going to be in control of the country and the economy moving forward. So a lot of times we do see the S&P 500 selling off, and that might also drag down and affect the price of Bitcoin as well. So we just have to wait and see how it plays out. But at the moment, what I'm seeing is, you know, pretty nasty rejections from up here. We could get, you know, an ascending triangle here, and that would be really bullish. And I'd expect a push up to our target here, our fib targets of the 1.272, and then also the 0.272, right, from this bull flag that we've got here at the moment. So that would be the target there. So those are the main things that I'm looking for at the moment for BTC. But if this ascending triangle here does fail and we lose this order block, which is basically at 66K at the lows, then I would be expecting a rollover to test the range low here at 61.2 or even deeper to 58. And then we'll have to wait and see how price reacts down there. I'd be pretty surprised if we came lower than 58K, but I definitely could see a breakdown, something like this happening. We hit 58K and then bounce off that again, reclaim the lows, and then end up pushing later on in the year. Okay. So, yeah, I think calls for much lower at the moment just seem a little bit ridiculous, but there's always that really strong level here at 48K, which is a really clear S&P support and resistance level, I should say, and it's also the 0.618, and on top of that, it's also the developing yearly value area low. So there's massive amounts of confluence at 48.5. So if you're super bearish, I think that would be the level that I'd be looking for. I don't think we're going to get down there. I think, the lowest we could possibly go here is most likely going to be 58 unless something really does go wrong macro wise, but I doubt it. I think most likely path right now is going to be 61.5 gets tagged, and then we chop around sideways for a little bit longer. But then also it could be a little bit too bearish and we're about to do something like this and then just pop off and pump. And this range we've been in for by then would be about 124 days, finally comes to an end. So let's see how we ends up playing out. I think, I also like to look at altcoins. So Solana is a really interesting one just to take note of here as well, which is looking horrific, to be honest. But that also could change around by the end of the day. But breaking below and having this deep candle below the previous neckline of this inverse head and shoulders is a pretty bearish sign. Like, we had these really nice inverse head and shoulders here, and then a reclaim of this range low, and it's just failed to hold. And then we, finally had that rally and push up, and it just rejected straight away. So that obviously is a pretty bearish signal for me. And then the other thing as well is, we have the high here, obviously, and then this is a really obvious lower high getting locked in here at the moment. So I could easily see Solana coming back to $125. And then, yeah, if things got really nasty, you could see it come back to 78. But I think that's probably a bit unrealistic. Most likely this consolidation here around $100 would hold it. If, we sort of had a worst case scenario, right? Come back to $110 or something like that, or, somewhere in this mid range here, about $100. I would be pretty surprised if we broke below that before some sort of a reversal of Solana. Okay. The other thing I wanted to just talk about as well, guys, is just like altcoins and their placement. So in the last cycle, the halving was, I'm pretty sure it was like the 11th of May or the week of the 11th of May, 2020, right? So that was about here. And if we sort of compare where Ethereum is right now, one thing I need to check, sorry, is this halving was on the 15th of April. Right, so if we compare where for Ethereum, price was still massively in accumulation range. Like altcoins hadn't done anything until we push until the mid-July. And if we compare that to where Bitcoin was in the middle of get this chart up. If we compare that to what Bitcoin was doing, Bitcoin was already up at like pretty key levels and had and was looking quite strong mid-July, right? So we were sort of having this rally here breaking out towards pushing into 12K, and coins like Ethereum, which is a pretty good barometer for the entire altcoin market, was still almost back at the deepest levels of its bear market, right very deep in its accumulation range. If we just go and have a quick look at total 2, right, we can have a look and see where on the, just get up the halving and put in the level again on the 11th of May, right? And we just have a quick look at that, like where all the altcoins were, including Ethereum, when the halving happened. So we're only a few weeks past the halving, right? Still very, very deep in its accumulation range. If you compare that now to where we are, like you know, we're way broken out of accumulation. So the market is, even altcoins, in my opinion, are massively ahead of schedule. When was the halving this time? The 15th of April, I'm pretty sure it was. Right. It was back there. So like compare where altcoins were this cycle to last cycle. Like, yeah, they hadn't even started yet to move at all. And that's why people like, retail is a little bit negative, even though we're close to all-time highs on Bitcoin and stuff like that. Guys, you have to understand where we are in the cycle, because typically altcoins, don't break out and have a really big rally like what we had from our October to April period, which was 140% rally over 180 days. Like, you don't usually have that type of move this early. That usually happens post halving. And the real move in altcoins realistically only started 238 days post halving. So if we go and have a look, 238 days, 238 days post halving would be the 25th of November, which sort of matches up perfectly with what I've been saying to you guys about the breakout. You'd be expecting, the big rallies and, the stronger moves to sort of come towards the back end of the year and Q4. So hopefully that makes a little bit more sense and sort of, anchors you to understand where we are in the cycle right now and how far, prices on Bitcoin and prices on altcoins have moved ahead. And, like things like Solana breaking out of its accumulation range and, having an 850% rally, basically before the halving is pretty amazing. So altcoins massively ahead of schedule. And that's why some altcoins have had huge throwbacks already. And, they're retesting the accumulation ranges. So like Aave, for example, it's basically still inside its accumulation range. It's a bit of a weird one because, had the angle here, but, a lot of them, they still haven't broken out of accumulation, and rightfully so. And that's just because of the location that they are in the market cycle right now. It's not the time for altcoins to be breaking out and going on, 700, 800% moves, just one after the other. Like, Illuvium as well, okay, yeah, we had an amazing breakout and a lot of us took that trade for, 200% from range low to range highs. And, overall in this trading period, the 150 days that we've had since October, 300% moves to upside. But then, we've had this massive throwback now, 50%, and that's across a lot of the altcoin market as well. And we're looking really weak at the moment. This might come all the way back down to the range lows at $38, or even all the way down to the mid range here at $64 or deeper, right? We might come back and retest 50 down here or something like that. Who knows what's going to happen? But, all of that's possible because we're still in the early stage of the altcoin season, right? We haven't really gotten to the point. And I do also think that, we did move very aggressively in a lot of altcoins. We sort of had a mini altcoin season because we finally got out of the point where, massive darkness and despair, and then we got a bit of sort of reaction out of Bitcoin, and then everyone started piling to alts again. So we did get that early rally, early movement in the market as it is general, but now we've sort of got a little bit ahead of ourselves. Now the market is correcting to keep us on track and keep us where we need to be. Link as well, this went into its bear market quite early, but May 2022, whereas the rest of it didn't get into the bear market, the accumulation range lows, I should say, until the end of 2022. So that was in the accumulation range for ages. And that's why, we sort of have had these big pumps and breakouts and, 190% move. But then, this is looking really bearish still here at the moment. And this is just a reaccumulation, guys. So accumulation was here and now we're in reaccumulation. We're not into the mega pump phase of the market just yet. Like, the market's just not there. And I think a lot of people are expecting it to be there right now. We're just not in that stage. We're in the reaccumulation stage. And when a lot of them are coming back and they're probably going to retest, like Link might come all the way back and retest the range highs and then break out and go again. And that would be very similar to when Ethereum had this rally out of the lows here, had 400% move from the range low to range high, broke out of its accumulation range. Right. And then we had quite a large pullback, right? A 36% pullback to retest the range highs before taking a move and pushing higher again, right? So just needing to understand, where we are in the market cycle, I think can just help create a lot of clarity. And I sort of feel like that's the move that's happening at the moment. This move here, we had early breakout, right, and then a pullback. But because this move here, this breakout has happened a little bit earlier. Let me just see if I can get the right. So we sort of had this breakout like this has happened earlier. So we've had to have a deeper pullback. We sort of ended up moving like this because we also didn't have the COVID throwback either, which probably made it longer for the recovery to take place. We're sort of having now a deeper pullback and, sort of coming back like this, but just finding its way to keep us on track again. And sort of that's kind of what's happening right now, because we went too quick, it went up too fast, too early. Now the market is just finding its way to keep us back in balance and keeping us back on track, like it always manages to do, to hit the right levels at the right time before the bull market really starts. So that's why I'm kind of expecting, you know, the breakout and the real bull market to start in that, November, October sort of period. And once again, here with Ethereum as well, the rally where we get into the really big move, right? When does it start? It really starts to pick up throughout October, and then it finally breaks out in this November period, and then it takes off, right, and gets really ridiculous once we hit the new year in January. I think actually, what was it? The 4th of January. So the 3rd of January is when we had the real explosive growth here, right? And it just took off from there, right? And that's when, the mega altcoin season starts. And so a lot of people feel like we're in this phase here at the moment, right? And expecting all altcoins to just pump and break out to new all-time highs and pump 1,000%. But we're not there right now. We're still in consolidation. The market still needs to go sideways for a little bit and reaccumulate for a while and rebuild, sort of repressurize the spring and rebuild that base before we take off and pump into price discovery. So that's my thoughts at the moment of just where we are right now. And, we could see, even Ethereum, this could be a high getting put in here right now. And it could bleed all the way back down to here and then, sort of rebuild that base. And we have a really strong reaccumulation before we pump, maybe it doesn't break out until, a bit later because Ethereum usually lags. December, January. But obviously things like the Ethereum ETF getting approved, and if, we have massive inflows, that's going to have a big impact on what happens with this market as well. And also the rest of the altcoin market as well. So we need to keep our eyes on that and respond when the new data comes out as well. So that's pretty much it from me, guys. Hope you've enjoyed this session and it sort of helped to anchor you a little bit more on where we are in the market right now. I'm just trying to think of maybe one or two more coins that have sort of come back to retest their bull market lows, but bear market lows, but have a look through just all the different charts, guys, and just look for those charts that have been in their big long accumulation ranges for a while, and then sort of having those pullbacks to retest those range highs, kind of like what we saw with Ethereum back here, because those are going to be the markets that you want to be looking to try and accumulate sometime, because that's basically, you wick off accumulation and then you have that throwback, the final throwback before, you get the move into markup. So that's called the backup action, or, last point of supply before you break out and go on the really big run into markup. So thanks a lot for tuning in, guys, and we'll see you all in the next episode.